High net worth individuals often find they're unable to take advantage of many tax deductions and tax credits that those who fall into lower income tax brackets can. But there are several other tax breaks available that can add up to significant tax savings. Though once your income exceeds a certain amount, some tax breaks can be lost to you. There are several areas where high net worth individuals actually stand to benefit more. Still, other tax breaks apply to all taxpayers regardless of income tax bracket, but often fall off the radars of high net worth individuals. It's always been the case that high net worth individuals can help offset their tax consequence by gifting to family members and philanthropic organizations. Assets held in your name that are over and above the $5.45 million threshold incur up to a maximum of 40% estate tax under current federal law when left to your estate. If you live in certain states, you may also be subject to additional estate taxes. So it's in your best interest to move these assets out of your name. You could do this by gifting up to $14,000 per year per person to any given individual tax-free. On top of that, there are additional excluded gifts you can make. For example, you can pay tuition-only expenses directly to a qualifying domestic or foreign educational institution without limit and without any tax consequence. Also, you're permitted to pay someone else's medical expenses directly to the medical care provider tax-free. Another great way to minimize overall tax is to donate to charities. Taxpayers can donate up to 50% of their adjusted gross income and carry over any unused deductions for 5 years. If the individual has a significant amount of money in investments, they can even choose to donate stocks to a charitable organization, up to 30% of their adjusted gross income. In this way, you avoid paying capital gains taxes on stock gains, though the stocks in question need to be held for more than 1 year. If an individual pays income tax to a foreign government, that foreign tax can be claimed as a credit against the U.S. federal income tax you owe. If you own a diversified portfolio of stocks and mutual funds, and they're held in a taxable account, you may not realize that you've indirectly been paying some foreign tax already. A quick review of your year-end brokerage statement, Form 1099, will detail the amount of foreign tax you've paid. If you have questions about these or other areas where you may be eligible for a tax deduction or credit, contact your Untracked Early advisors for more information. I'm Ryan Brandt with Untracked Early.